Good morning, everyone. It is Tuesday, May 10th. It's 9:05 a.m. Eastern time, and the ramp that began in Globex is continuing. Looks like it wants to continue into the cash open. Let's go up in time frame. Let's go to a 30-minute chart. And it's hard to, this is an area to keep an eye on. A lot of stuff in here. Now that's a long way up there. There's really not a lot between the Globex low and this level, frankly. Yesterday's high, cash high, will be important, and we'll keep an eye on that. But we got really compressed. We were at a point where we could have really fallen into the abyss. We could still fall into the abyss. The Dow did tick below its February low, but now it's back above it. As far as direction is concerned, real short term here, we're seeing a lot of strength on the 30-minute chart. Now we have a higher high and a higher low. It's always problematic when you get these big moves that begin in Globex, because do you want to chase a gap like this? Maybe what you do is you sit back and you wait. If you want to go long, your stop, quite frankly, this is just the way it is. Your stop would be here. Now that might be acceptable, depending on your time frame, your account size, all that other stuff. This isn't unrealistic, really, depending on a number of different things. But if you are trading these pivots, then you probably have to guess, if you were to go long, that somewhere in here holds, and be willing to accept that risk. Or you just wait for the first half hour and let things set up. Or you wait till this afternoon and you trade the trade that has occurred between the cash open and the afternoon. So you can always use your time frame to define the market and define the auction you're trading when a particular situation isn't comfortable for you. Okay, it's 9:44 a.m. Eastern time, and this is we're having a big bounce here. I can't overemphasize how important it is for you to watch daily charts as you day trade. It keeps you from getting lost. A lot of times it can ground you, and it can give you perspective. What I want to show, well, let's just do this. I can't find it there. Let's look at a daily chart. And here you are. I'm going to take some of this stuff off, and we'll okay, now we have a nice clean chart. This is yesterday's range. We're not quite at the level of yesterday's range. Yesterday's cash session high, I think it coincides with, I'll have to check that. But this is the upper extreme, and then this would be another level. Okay. Now, at this point, this morning, this session, from the Globex low to the high, we were up 2.65%. That's a pretty big move. If we get to yesterday's high, that's 3.5%. So we're already in the realm of recent ranges. Now, that doesn't, it's just information, I guess. It's something you need to be aware of when you're day trading. So right now, to me, the best areas to trade are going to be in here, and then up in here. And how I'm going to do that, I'm going to go down in time frame and see if I can't find my setup. If market's making lower lows and lower highs, I'm either flat or a buyer or a seller. If it's making higher highs and higher lows, I'm either flat or a buyer. Now, at the moment, because we had this gap up, let me show you that. I'll just go to this screen. Now, this is a chart that I keep on another page, another screen. And this is basically cash session data. And you can see, this is perfect. I like this. If I can get the chart to cooperate. There we go. This is yesterday's cash session high. And you can see we came right up to it. Now we're trading down. Now, so last night's low is going to be, close will be important. You know, you can see we're in this gap here. This is Globex trade in the cash session. We're in this gap. Now, breadth expanded. It's holding up okay. But everything that I'm showing you now is how you need to be thinking when you're thinking about intraday trading. This is all part of the decision tree. What's the daily chart look like? What's the daily range looking like relative to recent daily ranges? Where's the previous day's high, the previous day's low? What happened in Globex? Did we gap up? Did we not? All of these things are part of the decision process. There is no such thing in day trading as this nice coloring book, paint by the numbers approach. Well, you buy here and then you cover here, or you sell here and then you cover here. That's what makes day trading so difficult. It is a there's a lot that goes into the decision-making process, and that's why I try to keep it simple. You know, you can make it as simple as this. If the market is making lower lows and lower highs, you sell. If it's making higher highs and higher lows, you buy. Now, over time, if you followed that, you will have a positive return. The degree of your positive return will be determined by how you process the context, all this other stuff that I'm going through. Okay, now we are heading towards last night's cash close, which is, let me find it here on my screen. Other chart, right about 39.87.5, which is right about here, close. Breadth is still positive, but sloping and is negative. So I would not be surprised to see one or more of the indices take out their Globex low, at which point in time you want to be paying attention to see if there isn't another reversal to the upside. Now, if it sounds like I have an upside bias, I do. We already have a pretty wide range. So, you know, getting back to the context thing that I discussed earlier, and I apparently part of what I said got cut off. So I'm going to try and repeat what I said earlier. You know, you will do very well over time if you do nothing but very rigidly follow the concept of, I want to be short if the market is making lower lows and lower highs or flat. I want to be long if the market is making higher highs and higher lows or flat. And the or flat part helps you prevent this affliction of trading a narrative when the market is not confirming it. Now, the level of your success ultimately will be determined by other things. the context. When you choose to, as opposed to rote following higher highs and higher lows, lower lows and lower highs, when you choose to stand aside and let it go, or when you decide it is time to participate because of the reward to risk. Which brings me back to, I am making a guess here. I'm making a hunch, an educated guess that I'm biased to the long side of this market. I'm looking for a bigger move than a one-day wonder move. And I fully realize this could still be part of this waterfall decline that we've been in since that recent high. And I missed something to the downside. That's okay. I'm willing to do that. So that's everything that goes into my decision making here when I'm not short. I can't go long because the market is making lower lows and lower highs, and it's in the middle of today's session range. So if I go long here, I have to put my stop somewhere, a couple of handles below the Globex low, and I think I can do better than that. So that's my entire decision-making process from an analytical and a tactical strategic perspective. To me would be absolutely ideal if one of the indices trades to a lower low. That's when I want to start looking. I think that could be a really, really good long trade setup. A lot of people, especially day traders, they don't, I have a very specific methodology. I have a very specific style that I follow. I'm not in here trying to twitch trade all day long, capturing ticks. And people that find me and sign up and then leave are typically twitch traders, and they're unhappy that they found yet another person that can't, at least I don't try to tell people how to scalp. I don't think you can do that. I don't think it can be told. I don't think there's an edge there. There's probably, because there's so many traders, there's probably somebody out there that can do it, but they can't teach it because there's too much art involved. I've gone through this a million times, but I have learned, and I know for a fact, because I do it, you can be profitable if you follow some basic rules. And then over time, if you follow those rules, you become more and more profitable because your understanding of context will get much better. Okay, it's 10:56 a.m. Eastern time. Ionis, are you there? You point out gold, and that's something that I follow and trade very, very closely. I've mentioned this many times. We can only follow in the room. I follow the stock indices because it's the common denominator. But crude and gold are incredible day trade vehicles, just better than the stock index futures, frankly, because you get more trending moves, you get smoother moves, and it's the exact same setups. Let me go into day session. This is both sessions, but you get these incredible setups and trending moves in gold, and the same thing in crude. And both of them have micro contracts that are very liquid, very tradable. This is something else. I may do a webinar just on trading gold and crude. Basically, it's going to be the same thing, but for some reason, people think that there's some magic to each individual contract. There's not. Okay, this is where you start getting interested. We're going to have acceleration lower here, but it's also an area for a potential reversal. Now, I want to warn you, I'm not saying go long. I'm saying pay attention. This is an inflection point. Now, breadth is absolutely cratering. The ES has gone to a lower low. The NQ has gone to a lower low. The Russell has gone to a lower low. Everything has gone to a lower low. So, but if this is an area where you could see a reversal. If you got short, I didn't. You have to take some partial profits in here or trail a very, very tight stop. Okay, trade above here is a long trade setup. Your stop has to be, it can't be a tick below this low. It has to be a handle or so below this low. Now, the potential for this trade is back 2 or 3 today's session highs. Breadth is negative, but it's diverging dramatically against yesterday's lows at the moment. Okay, it's 12:08 p.m. Eastern time, and this is why I don't use 1-2 tick stops. This is inevitable. I think if you're long, you still have to have a stop down here. I don't know if this trade's going to work out. I think it's a worthy trade. If you're not in the trade, you could enter it here with a stop down here. You could enter it here on a trade above this pivot high. Breadth is quite negative. It's negative 1141. It's sort of flatlining. Is short term. It's sort of neutral, really, really short term. There were numerous divergences at this low among the indices. If you're keeping the 3 indices up, as I've suggested many times, the ES, the NQ, and the YM, very, very often have significant divergences at market turns intraday at important pivots. Now, those are divergences, and those divergences can be erased quickly. Looks like we're going to have another test of this low, but I'm long. If I get stopped, I get stopped. That's the setup and the trade I was looking for. And if I get stopped, that's just the way it goes. I am getting ready to go out. I'll probably be back in about an hour. And that's pretty much where we are. If we get below this low, I mean, we're already trading in the abyss. And we're also potentially in some phase of a waterfall decline to the downside. So you don't want to just blindly buy and hold and walk away, because I mean, this thing, we're down 6 or 7% off that recent high. We could be down 15 or 20% in the next few days before this thing does finally bottom and rally, 10 or 15% or something. This was an intraday trade. It was based on intraday information. I tried to explain in detail. Now, if you're bearish, if you want to short it here, here's your stop right here. But you can't short it here and use a 3-tick stop and expect to do well. So I'll be back in a bit. I'll let you know when I'm back. Okay, it is 1:36 and I got stopped out and I was out. So I didn't re-enter. But there were opportunities to re-enter this trade. I would have re-entered this trade. So hope you did if you got stopped out, or I hope you got long if you weren't long. The target for this trade is to today's high or much higher. Now, this is not a great place. I'm saying basically the same concept I said this morning. if you go long here, your stop probably has to be right here. That's just where the risk is at this, as defined at this point in time. Okay, it's 210. This has been a pretty extraordinary run. Wouldn't be a big shock to see it retrace somewhere in here. Depending on where you got in, you have a trade management decision to make. There's nothing wrong with pulling the plug on part of your position. There's nothing wrong with putting a stop here on part of your position. The potential for this trade is to or through today's highs, and it could, we're overdue for some really, really, really big bounce. Now, you don't want to give up substantial gains. If you're a day trader and you have a really nice gain, you have to consider managing part of your position rather aggressively. So that's an idea. Okay. Okay, it's 2:55 p.m. Eastern time, and we're building balance in here. This is a tradable structure. You can't be short below this level. I mean, long below this level, and you can be long. You don't want to be short above this level. Brett is negative 200, but we're coming into the time of day where the market can move very sharply, very directionally, and very far. So this is a tradable structure in here. It provides definition, lean, and there's opportunity that's based on larger degree context. That's sort of been a theme I've been trying to hit home today because it applies. Now, I want to point out, if you say, well, gee, Tom, the trend is down, I want to be short. Okay, be short. Your stop has to be a handle or two above this high, or you short it here on a break, and then your handle has to be your stop has to be a handle or two above this high, at least your initial stop. Realistically, your risk will probably be back to the midpoint of the structure. So trade location in the long run is more important than the direction you take, frankly. If you consistently take trades at good trade location, you'll make money. Regardless of, I've said this before, you can flip a coin to go long or short here and do that same exercise over, a few hundred trades, and you're going to make money. Because these are inflection points from where you're more likely than random to get a sharp move, an outsized move relative to the time frame you're trading. Okay, it is 3:19 p.m. Eastern time. We have 45 minutes. We have CPI tomorrow, which is another big deal related to the Fed. Right now, we're trading at the midpoint of today's session range. That includes GlobeX trade. We're hovering near, well, we're sort of in the upper half of today's cash session range. If we get above 40.37, we could really, really ramp higher into the close. As I said before, this is a tradable structure. I'm biased to the long side. If it breaks down, I am not going to sell it. That's a viable trade if you want to sell it below 40.003. I'm not going to do that. That's just me. I am not going to be in tomorrow, Thursday, or Friday. I am out of town. I will be away from my screens. I will send extensive updates each evening, and if necessary, before the market opens. But there's not going to be a live room tomorrow, Thursday, or Friday. And again, I will be sending updates. I think we're in the process time-wise of establishing a potential, a very tradable low and potentially a very important low. Where we are in that process is a guess. We're making lower highs every day. We've made so far, depending on how we close, well, we have 3 consecutive lower closes. Today would be a 4th, depending on where we, what happens between now and the cash close. So far, this looks like some stage of a waterfall washout type decline. There could be more coming. Certainly tomorrow, the CPI could be a catalyst for that. A lot of my breath work is getting really, really compressed, but it can get more compressed. It's, as I've said before, it's sort of a blunt instrument. We really haven't had, in my mind, that capitulation washout type of trade that you usually get prior to intermediate lows. Not always, but usually. So unless we start to see some strength and we start to see upside levels taken out with persistent strength, as opposed to one-day wonder rallies, you have to be really cautious about pressing the long side of this market on anything except an intraday basis. On an intraday basis, I'm just as likely to want to buy this market as sell it, because quite frankly, in these protracted downtrends, your counter trend rallies, especially when you have gaps down, tend to be the more defined, better trades. Okay, I'm here until 4. And if I need to, I'll come back in before then, but I will certainly be in at 4. We'll do a recap. Okay, 4 p.m. cash market is closed, and today turned into another nothing burger. There was a nice move down that I missed, but that's okay. The setups were there. There was a nice move up, and I missed this as well. I got stopped, went long, got stopped out. I chronicled that earlier, but hopefully some of you took some of this out. We built balance, broke a little bit, went nowhere. If you took this short trade, you didn't lose money. So that's just the way it is at the moment. Now, as we head into tomorrow's CPI, that will be some rock and roll, no doubt. I don't know where the cash market is going to close. If it's going to close in this general area, and it's probably going to, maybe it won't be a lower close than yesterday, but it's pretty damn close. We made a lower low today. We made a lower high today. So the waterfall decline idea is still in play. There is nothing below current levels that's objective that you can point to and say, that's an obvious level that the market's heading for. That's where, it's going to turn. There's a lot of horizontal volume. There's nothing below us but magic and ether, neither of which I trade. And if the market does make some sort of signal, such as if we have some sort of dramatic down day and the market closes on its highs, then you have some objective evidence. Okay, short-term low could very well be in place. I have a lean, but trying to play catch the falling knife just because it hits some magic number is a no-no. Don't do that. The immediate key reference areas tomorrow to the upside will be today's session highs and then the previous day's highs. To the downside, it's going to be whatever low is put in Globex when the cash market opens. So that's sort of the pattern. We're in a downtrend. Breath work is getting very compressed. I will update that as necessary. And again, I will be out of the office through the weekend. I will, however, send out updates as necessary, morning and evening. You will not be left blind with what's going on. I think time-wise, we're close to at least a tradable low and potentially a very important low. Price-wise, it's a guess because we're making lower lows, lower highs every day. We have CPI tomorrow. Who knows what the participants will do, what their perspective of that will be as it relates to all this interest rate stuff. So that's it. Guys, have a wonderful evening. Enjoy the rest of your week. Trade well, be smart, be disciplined. I'll talk to you on Monday.